Let's talk about tariffs. We all know that President-elect Trump has promised big blanket tariffs starting in 2025. But what does that exactly mean? Well, before we get there, let's understand why Trump wants tariffs in the first place. And according to my research, there are three big reasons. Number one, he wants to bring manufacturing back to the United States. Number two, he wants to use the tariff revenue to help fund big tax breaks and tax cuts. And number three, he wants the United States to become more self-reliant and not rely on foreign countries to produce the products that we use in the United States. Now, some people don't believe that these tariffs are gonna work. Some people are saying that tariffs will kill American jobs. Some are saying that tariffs will make inflation worse, and others are saying that tariffs will start a trade war. That's why in this video, I want to show you the real impacts of tariffs, but not through a political argument or an emotional argument, which is a lot of what you're seeing on the internet. Instead, I want to show you the impacts of tariffs by studying history, because while history doesn't exactly repeat itself, it does rhyme, and we have seen tariffs before. More specifically, I want to go over four things. Number one, I want to make sure we're all on the same page by understanding what tariffs actually are. Number two, let's go over the historical impacts of tariffs that we have seen in the United States. Number three, let's go over Trump's 2025 tariff proposal based off of what we know right now. And number four, let's talk about the potential impacts of this proposal, assuming that they go through. So let's start with number one. What are tariffs? By the way, in case you're wondering how this can create unique investment opportunities, I want to remind you that on January 7th, I'm hosting a live and virtual investor workshop where I'm going to be going over how you can build a wealth plan in 2025, how you can systemize your money, and how you can find unique investment opportunities in 2025, because we're going to see a lot of changes in our economy. It's a completely free workshop. It is virtual, and I'm going to be doing it twice on January 7th. Once in the morning at 10:30 a.m. Eastern Standard Time, and once in the evening at 8 p.m. Eastern Standard Time. There's going to be so much value in this workshop. It's going to be a lot of fun. So if you have not registered for this yet, make sure you do, because we have a limited number of seats available. There's not going to be a recording, so if you'd like to join, all you have to do is click the link down in the description below to register and join me on January 7th. According to the Council on Foreign Relations, a tariff is a form of tax applied on imports from other countries. So a tariff is a different type of tax. And this is where it helps to understand some of the different types of taxes that you pay. For example, when you go to work and earn money, you pay an income tax. When you go out and you buy a car, you pay what's called a sales tax. When you go out and buy a house, then you have to pay a property tax. When you go out and buy goods from China or Canada or Mexico, you might have to pay a tax on these foreign goods called a tariff. Now, this is where your taxes can vary depending on what the laws say. I'm going to go over how these tariffs work and who pays for these tariffs in just a minute. But for now, let's understand that tariffs are a form of tax, which brings us to number two. How have we seen tariffs in history work? This is going to sound a little bit crazy because it's not what we're used to, but prior to the year 1913, the government generated most of its taxes from tariffs because, believe it or not, prior to 1913, there was no federal income tax. In fact, tariffs provided as much as 95% of the revenue for the federal government. But of course, the system began to change in 1913 when the federal income tax was officially signed into law, and that was when the government started using less tariffs to fund their government operations and started using more income taxes. By the way, here's a fun fact. Back in 1913, the federal income tax was a whole lot simpler than what it is today. What it said is that if you earn more than $3,000 a year, then you'd pay 1% of that income in taxes. And if you earn more than $500,000 a year, then you'd pay 6% of your income in taxes. And if we adjust this for today's dollars, what this says is if you earn more than $95,000 in today's money, because of course inflation, you'd pay 1% of your income in taxes. If you make under $95,000 a year, you'd pay $0 in taxes. And if you're a big baller making over $500,000 a year in 1913 dollars, or adjusted for today's dollars, $15.9 million in today's dollars, then you'd pay 6% of your money in taxes, but otherwise just 1% of your income in taxes, under $15.9 million. Today, the top tax rate is 37%, and this is on all income that is over around $609,000. So yes, the tax code has changed quite a bit. So we know that tariffs are not a new concept. They're a form of tax, and they were the primary form of tax for the federal government until around 1913 when we started to see that shift. But the question is, what is the impact of tariffs on our economy today? Well, the good news is we saw what happened back during the 2016 election term, because back then, Trump was also advocating for tariffs and passed some tariffs in his first term as well. For example, when Trump was running for president in 2016, one of the things that he was campaigning on was big tariffs. Sound familiar? And then when Trump entered the White House in 2017, he passed big tariffs on China. And then he passed big tariffs on steel and aluminum. Now, there is one key difference that you have to understand between the tariffs that we could be seeing in 2025 and the tariffs that we saw in 2017, and that is the reasoning behind those tariffs. Remember, today, the big three reasons why Trump has been advocating for tariffs is to, number one, bring manufacturing back to the United States, number two, generate more revenue for the federal government to fund the big tax cuts, and number three, become less dependent on foreign countries. Back when Trump was first president, it was a little bit different. Let me read you a press statement that the White House published in 2018 after Trump passed a big tariff. This is from March 2018. The title is President Donald J. Trump is addressing unfair trade practices that threaten to harm our national security. Then if we scroll down, President Donald J. Trump is addressing global overcapacity and unfair trade practices in the steel and aluminum industries by putting in place a 25% tariff on steel imports and 10% tariff on aluminum imports. What does that mean? Well, it sounds like the big reason for tariffs back in 2017 and 2018 were, number one, to protect against unfair trade practices, and number two, national security. The tariffs imposed by President Trump will address steel and aluminum import quantities and circumstances that threaten to impair our national security. So back during Trump's first term, he put big tariffs on steel and aluminum. And the primary countries where we were getting the steel and aluminum were Canada, the EU, and of course, China. Now, the goal with these tariffs was to protect national security, but we can still look at the economic impacts of these tariffs on steel and aluminum jobs and prices in the United States. This is a chart showing steel prices, and you can see that steel prices shot up when Trump entered office in 2017. But he didn't pass the steel tariffs until March of 2018, which, like you can see here, caused steel prices to spike for a few months until October 2018, and then steel prices actually fell pretty steadily until the pandemic hit in 2020, and then steel prices shot back up. And let's also take a look at how this impacted jobs. According to the data, these tariffs cost the United States almost 250,000 manufacturing jobs. Now, the problem with that data is it doesn't give you the full picture, so let's dig a little bit deeper. Take a look. This is a chart by the Federal Reserve Bank showing the number of manufacturing jobs in the United States, and you can see that when Trump took office in 2017, there were about 12.4 million manufacturing jobs in the United States. By December 2019, there were just under 12.8 million manufacturing jobs in the United States, but then came the pandemic and the manufacturing job market crashed, and then when Trump left the office in January 2021, there were just under 12.2 million manufacturing jobs. Today, we're back at around 12.8 million manufacturing jobs in the US. So let's put this all together. When these tariffs were imposed on foreign countries on steel, what we saw happen was prices shot up of steel, and then they began to fall, and then the pandemic came and prices went back up again. And if we take a look at jobs, what we saw happen with jobs is manufacturing jobs went up, and then of course the pandemic came, and then the number of jobs fell along with the pandemic. Today, we have more manufacturing jobs than before, but this is where you kind of have to leave it up to your own interpretation. If the pandemic didn't happen, would we have seen a net growth of jobs or loss of jobs? Now, the last thing that I want to mention here before we move on to number 3 is who's actually paying for these tariffs, because these tariffs are a tax and somebody has to pay for them, and the person that's paying for these tariffs are the person that's receiving these goods. So if I'm a company that's using the steel and I'm buying the steel from Canada or EU or China, then I got to pay for these tariffs. And ultimately that cost gets passed down generally to the consumer. I mean, every tax, whether it is an income tax or a corporate tax, gets paid by the consumer, because businesses are not the ones that are paying taxes. They're going to pass it down to the consumer. Tariffs are ultimately going to be passed down to the consumer as well. The question is the corporation going to shrink their profits or charge more money for the product at the end of the day? So tariffs are paid for by the person that's buying the product, and ultimately it's the end user who's always paying for the product. and all the other fees associated with it. I mean, if you're buying shoes from Nike, not only are you paying for the cost to produce the shoes, you're paying for the employees' wages, you're paying for the sales taxes to produce the product, you're paying for the rent on the buildings that they own, you're paying for the mortgages on the building that they own, you're paying for their electrical bills, you're paying for the transportation costs to move the raw goods, and you're paying for any additional tariffs or taxes that Nike has to pay as well, because Nike only makes profits from their consumers. So all costs for a business are paid for by consumers. Now that we understand what tariffs are and how we have seen tariffs in history, let's go to today. What is Trump proposing for tariffs come 2025? President-elect Trump on November 25th, 2024 announced his intention to impose additional 10% tariffs on China, as well as additional 25% tariffs on Mexico and Canada. So Trump's new tariff proposals, based off what we know today, are much more broad and much more aggressive than what we saw in his first term, now because Trump really wants to see three things, according to what we have heard so far, through these tariffs. Number one, he wants to bring manufacturing back to the United States by disincentivizing companies from manufacturing overseas. Number two, he wants to use the revenue from these tariffs to fund big tax breaks for corporations and hopefully people too. And number three is he wants the United States to become more self-reliant. Now, while these two things are pretty self-explanatory, let me dive a little bit deeper into this, that way you understand what this means, because we've been seeing a pretty large trade deficit here in the United States. A trade deficit means that the United States is importing more goods than we're exporting, which means we're relying on more foreign countries to produce the goods that we're using here in the United States more than what foreign countries are relying on us. So we're buying more things from them than they're buying from us, which of course can carry some sort of risk. For example, many European countries relied on Russia for energy. But then when Russia invaded Ukraine, Russia turned that energy source off, and that left many European countries dry on energy, which made energy prices skyrocket. So if China were to say, we're no longer going to manufacture your iPhones or your cars or your clothes, that could be a problem for the United States if we can't produce those products here. That's what Trump is alluding to in this instance. Now, whether or not you think that's a real concern, it's really up to you. I'm not telling you whether it is or it isn't. I want you to understand what the self-reliance means. Which of course brings us to the fourth part of the video, which is what is going to be the impacts of these tariffs. Now again, tariffs are a form of tax, and we don't know which other taxes the government is going to cut and how they're going to really allocate their budget. We've heard a lot of talks, but everything is just in proposal form right now. Now, at the end of the day, the United States government has what's called a federal budget. And for many years, we have seen the government outspend their budget. This is why we're running a very large national deficit. This is why we have such a large national debt crisis. It's because the government keeps spending more dollars than what they're generating from taxes. And so if the United States government imposes these tariffs, there's going to be a cost to that, which is ultimately going to be passed down to the consumer. But the question is, are people going to be able to offset these higher costs through some other way? Maybe through energy cost cuts, maybe through other tax cost cuts. We don't know for sure. And so what we do know is that tariffs, at the end of the day, are a fee. It's a tax. Somebody has to pay for it. And the end user, the customer, is always going to be the person that pays for things through tariffs. But now the next question that we have to pay attention to, because we don't know how this is going to play out, is are companies going to say, all right, we're going to move our manufacturing out of China and into the United States? Or are they going to find an alternative way to manufacture the products and avoid paying that tariff? If they move that cost somewhere else and avoid paying the tariff, then maybe costs don't go up. Maybe it does. The alternative is companies say, we're going to move our manufacturing out of China and into the United States. Well, that also means costs are going to go up because salaries and labor costs and manufacturing costs are much higher in the United States than they are in China. But this is where, is that moving your manufacturing jobs into the United States going to strengthen the economy, strengthen people's wages to make it less of a painful cost to pay the higher prices? And again, we don't know how things are going to play out. My job is not here to try to predict what's going to happen because every single person has a financial opinion, or a couple of financial opinions, but they're kind of like armpits. Some stink more than others. This is where I want you to understand how the things have played out in the past. We've talked about history. That way you can make smarter decisions and understand what's happening instead of making all these emotional arguments. We have seen the prices of things rise through tariffs and also fall through tariffs. We've seen how the pandemic has impacted things. But we don't know if it's actually going to bring manufacturing back. We don't know which tariffs are actually going to get passed. We don't know which countries are going to be applied and hit by these tariffs. And we don't know if there's going to be loopholes for specific countries and specific companies. So whether these tariffs are going to help or hurt the country, we're not going to actually know until 2026 or 2027, and it's going to be in compilation with the other tax cuts that we see or don't see, along with what changes happen in the economy. But one thing that I do want to mention that I think you might want to pay attention to is the potential trade wars that we could be seeing with these tariffs. China has responded to these tariff threats with their own threats of tariffs on the United States. Now, to be clear, China has already been taxing, meaning imposing tariffs on goods that are entering China from the United States. That means if you're an American company selling products in China, the Chinese government has already made it more difficult for you to sell your goods in China. So will they make it more difficult? Well, maybe. Mexico has also talked about retaliating through their own tariffs on the United States, and even Canada has talked about threatening their own tariffs on the United States if America imposes tariffs on them. Now, fortunately for the United States economy is generally in a better position than many of these other countries. For example, there's been many talks about the Eurozone entering a recession if the United States imposes a tariff on them, because so many countries are reliant on the United States, and many of these countries don't have a very strong economic base right now to withstand these tariffs. Now, of course, it's in the United States' best interest to do what's best for the United States, not what's best for Europe or other countries. I mean, that just makes sense. But this is where the question that many people have, and we don't know the answer to until we see it happen, is what is going to be the true impacts. Now, we can take a guess, and we can take a look at what we have seen throughout history. But this is where I don't want you to get emotional. I want you to pay attention to what's happening. That way you can find the opportunities. Now again, on January 7th, I'm hosting a free and live workshop where I'm going to be going over specific investment opportunities and how you can build wealth in 2025 through this changing economy, because we're going to see a lot of changes. And as an investor, you want to know how you can have money to invest and how you can find those investment opportunities. So it's a completely free workshop. If you have not registered yet, I got the link for you down in the description. But this is where I hope you have a better understanding of how tariffs work, how we have seen them throughout history, and how we might be seeing them play out in 2025 and beyond. This long-term debt cycle, if it happens every 50 to 100 years, you might only live through one. We've seen how these short-term debt cycle recessions work. We saw it happen with 2008 with the Great Financial Crisis. So the question you're going to naturally have is, where are we on this long-term debt cycle now? Back in 2019, Ray Dalio said that we are very late in this debt cycle. So what does very late mean?